understand how some of these proxies work. So, okay, good. Sounds like a lot of you, this is making sense. So what you're doing is you're paying for that time decay over and over and over again. So all things being equal, this creates a negative expectancy on VIX-related assets. Basically, you then have a negative expectancy with VIX heading down. If you add in trading fees and slippage, the curve starts to accelerate, right? Starts to go down. And then if you add in leverage, like UVXY, that's supposed to be a leverage asset, then you get that dramatic negative curve on the asset like we saw in several of those examples that I gave you. So in short, VIX proxies are broken. They're simply broken. They're going to be broken. And there's really no way around that. So the next question is, how do I get around it? Well, fundamentally, I don't have a perfect answer yet. Sandy mentioned, could you just buy VIX options? You could, but because the VIX options have this priced in, it's also really hard to get an advantage just simply using VIX options as well. I looked into that. Maybe I'll cover that on a different session, but it's very difficult unless your timing is perfect on that one as well. Now, I am working on one method that might work. And I'm saying might because, like I said, I'm just giving you my very honest, real thoughts here. You see, I don't really care about how well the VIX proxies work. That's not actually my fundamental goal. What I really care about is if they can replace the percent upside as a hedge. And there's one solution that just might work. I am trying to test it right now. Okay, check out the March-April collapse on VIX versus SVXY. So SVXY is the inverse, which means it's supposed to go up when VIX is down, flat, going down, and then it's supposed to go down when the VIX spikes. Okay, so you see the numbers here? The VIX went from 17 to 60, so it went up 252%. The SVXY over the same time frame dropped 49 to 32 for a negative 35%. So you guys can see negative 35% is not an appropriate negative equivalent to 252%. It's not working. Once again, broken, right? You guys can see negative 35% is not a correct equivalent to 252%. Clearly, it's not delivering that one-to-one result. But again, I don't necessarily need a proxy that matches up on the underlying, though that would certainly be nice and it would certainly make my life a lot easier if we had that. What I really need is a way to replace the upside potential if the VIX spikes dramatically, as I expect is possible. So consider this. I could build a bearish debit spread on SVXY at the $40, $35 level, because remember, SVXY should go down when the VIX spikes, not vice versa. It should go down. And I should be able to pay about 50 cents for that entry. Granted, VIX is now up 4.5% today, so might have to wait for it to pop a little bit. But based on last night, I could get in for about 50 cents. So that's right here on the chart, okay? This white line is $35 on the SVXY chart. Notice that because the SVXY is broken, we're actually not as high as we should be, right? Because the VIX was all the way back up to its low levels. So the SVXY should be up here in the 60s, but it's not. Why? Because it's broken. It doesn't actually match. In theory, that could actually work to my advantage. What I mean by that is because the SVXY is starting at a lower level here, if it corrects the same 30%, it'll actually be easier to get below my level than where it was up here. And so this idea of trading at the 35 level should give me an easier way for it to break if we do get that spike in VIX and therefore that reverse move in the SVXY. So the idea here is that if the SVXY does collapse below 35 before December 19th, because we use the December 19th $35, $40 spread, my max potential would be about 900% ROI. Why? Because a $35, $40 put spread has a max value of about $5. If you paid 50 cents, you have about 950% ROI. Now, while that certainly meets the bill of replacing the 200% ROI of the VIX, which is what we're trying to replace, we have to account for the fact that it's fairly unlikely our timing is going to be just right? It's unlikely that it's going to drop right at that December 19th range. After all, when the SVXY drops hard, it usually recovers pretty quickly. Keep that note in mind. So a drop below $35 next week doesn't mean that it's going to be worth $5 on December 19th, right? Because it might drop next week to $30, but by the time December 19th rolls around, it might be back up to $45. Now, we can solve that through trade management, either by using a target or by using a manual exit if and when the SVXY makes a large drop. So we just look at the chart. We can say, okay, I can't get, the full $5, but I could get $3. And even with a much smaller win than the full profit potential, we can definitely give ourselves the 200% ROI potential in this scenario, right? So that part we can easily cover, because if we pay 50 cents and it drops down, it's worth 250. Okay, we're still going to make a 400% ROI potential, and that would, easily work for the purposes of our hedge. But your next question might be, Nate, what about time? Now you're just talking about timing it and using a spread. Isn't this how this whole saga started, where we didn't want to have to time it? Yes, because if I'm wrong and the VIX spike doesn't happen in the next few months, the SVXY is just going to grind higher and higher, right? Does that make sense? Because if VIX doesn't spike, SVXY is reversely correlated. It's just going to grind higher and higher. It's going to use that reverse curve up, up, up. And so it's just going to go higher. So what if we did a two-way trade on the SVXY? In other words, we put ourselves in a position where if the SVXY grinds higher, the VIX just stays low and does nothing, we actually make profit that we can use to roll over to the next month and the next month and so on. And basically what we're attempting to do is use this chart to pay us our premium, right? Because if the VIX just stays down, we're going to get this option decay chart that we can use to pay our premium while waiting for this chart to deliver our jackpot. Okay, so we want to use this chart when the VIX is down to pay our premiums and be able to continue rolling, and then use this chart to hopefully hit our jackpot when the SVXY were to crater as the VIX continues going. Here's how it would work in theory. And yes, I'm saying in theory because, like I said, this is not a polished presentation where I've done a whole bunch of back testing and have all the data. I'm literally trying to work this out in real time. You could enter a two-way trade here for about $1.70 on the SVXY. This would be the 40-35 puts and the 50-55 calls. A two-way option creates a box around the trade. You could get in for about $1.70, which gives you about 194% ROI potential. If SVXY is falling, what you would do is you would wait for it to break out of the bottom here, and then you would manage the trade by only closing the puts. Okay, remember, I told you, keep in mind, if the SVXY collapses, usually what it does is it pops right back up, right? So what we would do here is we would only close the put side for hopefully 250, 300% ROI on the put side, and then we'd wait and we would let the calls hopefully bounce back up, and we'd actually get more value on each side. I know this is more of a complex trade. I'm giving it to you just straight up as I'm thinking about it, but this is one way that you could do it. If SVXY is rising, what we would do is we would wait for it to get high enough to pay like a 20 to a 25% ROI, and then we would actually roll the entire box forward so that we're paying for our next trade. We'd go from the December expiration to the January or the February based on where the market's at. So if the SVXY grinds up, the trade would be in profit. We'd take our profit and we'd roll our box forward. We go from this box to this box. All right. Does that make sense? This is probably one of the more complicated sessions we've had. in the opening or closing playbook. So it's okay if it doesn't make sense. But this is the kind of stuff that I think through when I'm trying to build a position. How can I keep my ROI intact? How can I make timing less of a factor? How can I keep the risk reward relative? How can I protect in upside and downside scenarios? And so far, this is about the closest I've come trying to map this out. Other ideas that we could consider is we could weight the box to the downside with more contracts on the bearish end, which gives us a larger overall risk reward because the bearish side is going to pay out heavier. So we could put like 10 contracts to the downside and only 5 to the upside. We could essentially weight that box in one direction to give us a larger overall risk reward. That would take our net ROI from like 194 to 250, for example. Other ideas, we could roll the box forward on a time basis, even if the position is not net profitable. So we could say like, hey, every 2 weeks, we're going to move that box forward in time, whether it is profitable or not. So this is where I'm at on it right now, guys. I am working through this. This is my theoretical situation. I know the risk reward numbers are right, but I don't yet know how it all plays out in practice and how much value we will gain in the interim. So I'm just working through this in real time. And yes, you could use a GTC, a good till canceled order, on one side. The way that I would do it, though, is a little bit different. Unlike a normal two-way trade, I would actually have separate good till canceled orders on each side. So I'd have a call good till canceled order. If you go back to the chart, I'd have my calls where I had a good till canceled order up here for like a 20 to a 25% ROI. But then I'd have a put good till cancel order for more like a 250 or a 300% ROI. So I'm actually trading them differently based on how the market moves. So that's what I got for you guys. That's kind of my just raw thought process. I think about how to build this. By the way, a critical thing to keep in mind, I'll be talking about another way to trade volatility tomorrow on Opening Playbook. And I'm also doing something pretty crazy tomorrow on Opening Playbook, something I really never do. It's around a specific strategy. I'm going to walk you through that tomorrow. So make sure you're on Opening Playbook. That's, of course, at 10 a.m. as always. I'm going to walk through another strategy, but I'll also keep you guys updated on this strategy. I didn't take any of those positions yet because, of course, as luck would have it, volatility actually spiked today 5% for the first time that we've seen it spike 5% in a while. So I'm going to wait for the VIX to get back below 15. Hopefully it will get back below 15, and then I'll start building this position. If you guys want me to share those trades, I'm happy to share the trades with you. Just keep in mind they're experimental. I'm not going to put 100 grand on those positions. They're experimental. I'm trying to figure this out in real time with real data. Now, we could do this on the VIX directly, but keep in mind the VIX options also are priced in. So you're not really going to get the advantage on VIX calls or puts either, but I'm experimenting with that. So guys, I hope this kind of lesson was valuable for you. I know this was kind of a little bit of a left field one, just trying to literally take you through my thoughts and how I'm processing this, trying to find what's broken in the market. How could I potentially find other ways around it? That's often how I think through the markets. I kind of think, okay, here's a scenario that I'd like to take advantage of. Here's how it works or doesn't work. Here are the different ways that I could trade it. Here are the different structures that I could apply to that trade, and then try to figure out kind of the best of both worlds. So what I think I'm settled on right now, at least at my first attempt, is trying to build a two-way or some kind of weighted version of a two-way trade on the SVXY, and then I'm going to start mapping that out. Yeah, they're not very liquid, Fred. Again, we're dealing kind of in the corners of the stock market right now, Fred. So we're not trading out or QQQ, that's for sure. We are trying to map out a position that is more unique, and I'm going to see how that works. I've traded the SVXY just a handful of times on little one-off positions. I've never really built a true significant position, and so I'll look forward to that. PJ asked about the actual trade. I haven't taken it yet because the VIX actually happened to spike today, so our timing was such that I haven't actually taken any positions yet. I'm just mapping it out right now, but I will let you know as I take it. Yeah, the UVXY is a bit more liquid. The problem is it doesn't have the range to the upside that will work for the 2A option, at least based on the numbers I ran so far. Granted, I've only started running these numbers a little while ago. I don't have a perfect set of conditions yet, Jeff. But from what I could see, because the SVXY had that inverse relationship, it worked a little bit better for that upside kind of grinding profit. And so I'll continue to track that. And of course, I'm happy to let you guys know when I'm doing it, the actual trade, all those details. I'll keep everyone updated. Okay. Any other questions, guys? Obviously, the big takeaway, hopefully, for today is to make sure you're there tomorrow. I'm going to talk about a different way. As I think volatility is going to come back into the market, one of my favorite high volatility strategies. I'll walk you through that, and then doing something a little crazy tomorrow as well. Lynn, you can get the calculator anytime. It's in the opening playbook VIP members area, so I can pull that up and show it to you here real quick if you guys want to see that. So if you go into opening playbook, by the way, the first thing you'll see is our Sunday night invite in here, folks. So you'll see that as you log in, which I'm pretty excited about. But the other thing is this calculator will be right here under calculators. You can click that, and that will open up this calculator for you, which we built for all of our opening playbook VIP members. So that's in there. Of course, all the other good stuff as well, including this special banner to make sure that you are in there. There's nothing to download. It's just web-based. So it's just web-based. You can put all the numbers in there. Phone, tablet, anything will work for it.
I think the reason Lynn's asking about that is because that's the domain, on the New Money Crew domain, and it was getting blocked. So we're gonna see how quickly we can get that moved over to this marketspg.com domain that we're using for this room. And hopefully we will have it up there for tomorrow.
Yes. Okay, Lynn, I forgot that you were the one who asked about the domain. I'm sorry. Yeah, we will get that updated. I usually don't. I try not to touch the computer a whole lot on Sunday as well. I mean, partly because I am involved in church and things like that, and I don't want to be distracted. Family time and all that. But I'm going to be traveling, so I'm not going to be with my family anyway. I'm going to be with Graham to do that session. So that will be Sunday at 7 p.m. Again, that's members only. But like I said, you can kind of sneak in to be in there, even if you only paid the $1. Yeah, it should. John G mentioned that. I mentioned that to a lot of people, and some people said they still couldn't get through. Basically, adding it as an exception onto your browser, or I can't talk, onto your security list. So you should definitely be able to do that. But some of them said they tried and couldn't do it. Tony, I think, are you referring to maybe the one that Dave mentioned? Yeah, so Lynn said she added it as an exception, still didn't work. The meeting on Sunday, Sally, is a members-only meeting. Graham and I are going to put together kind of a presentation on a lot of it is what I've been working on in the background behind the scenes that I haven't got a chance to fully show. Really what it's designed to do is hopefully answer some of the more fundamental questions about taking advantage of the stock market, honestly. Not just a strategy and when to trade calls and puts, but really how do we recognize what kind of market we're in, and then what strategies do we apply to that, and how do we do that? How do we have a trading plan? How do we map all that sort of stuff out? So what I'm trying to get beyond on Sunday is not just trading strategies, although of course I love trading strategies. It's really what I research and do full time, but really even more fundamental than that. How do we take advantage of the stock market with those strategies? How do we know when it's a fast-moving market, a slow-moving market, a good time to hedge, a good time to be more risk-on, risk-off? How do we map out our trades in a way that really is universal, in terms of meeting the criteria that you want? Like this is kind of beyond trading strategies. And so that's what I've been working on with a little more of my time lately. My hope is that it really unlocks some opportunities for you guys that are, again, maybe even beyond the strategy level. So that's my goal and that's my hope. I showed Graham all my research, what I've been building. I think he was pretty excited about it, and so we carved out this opportunity on Sunday. Like I said, I'm actually going to fly down, walk him through a couple more of the details in person, and then we'll do it live for all of our members Sunday at 7 p.m. Probably from Graham's house. I'll be barging in. Maybe we did one presentation out by his pool. It was pretty nice. So maybe we'll do that. But by the way, one of those tools is that option outlook thing that I'm putting together. So I will probably be giving you a little bit of a preview of that as well on Sunday. And there's actually like 3 other tools that I haven't even mentioned yet that are in the works as part of that. So I've been working my butt off, just again trying to create resources that go beyond strategies. Again, strategies as well, but beyond strategies to really put you guys in a whole different level of approaching the stock market. So hopefully you guys will be as excited as I am by the time you see everything on Sunday night. Other than that, hope to see everyone in Opening Playbook. Gonna have some fun tomorrow. Cover a couple of stocks, have a watch list that Silas and I are putting together, and then I'm doing something kind of crazy there at the end of Opening Playbook. So take advantage of that. All right, Dave. I think I covered my basis. Went 16 minutes longer than our usual closing playbook session, but hopefully it was valuable. I'll see everyone tomorrow.
I think it was great. Good job. Complex topic covered as simply as possible, I think. And with slides and everything. I mean, it's like you took it seriously.
I tried my best.
It's crazy.
All right, folks. Thank you, everyone. See you tomorrow.
All right. See you guys at 10 a.m. tomorrow morning for Opening Playbook, 10 a.m. Eastern. I did post a couple of times. There's a new replays page where we're just trying to keep the last Opening Playbook and the last Closing Playbook session for easy access in the chat there. It's this domain that we're on right now, marketspg.com/NMC-replays. So it's been in there a couple of times. I'll post it one more time right now. So this is going to have, at the moment, because we're still in this closing playbook session, this will have this morning's opening playbook and yesterday's closing playbook. And then in a couple of hours, when this video renders and gets online, it'll switch to this morning's opening playbook and this closing playbook. So toward the evening, it'll have that day's sessions. Kind of before the evening, it'll have that morning's opening playbook and the day before's closing playbook. So if you want to bookmark that, not to use the word book so many times, but if you want to bookmark that, you can. And then the information for the $1 membership to get all of those various resources that are in the members area for people who come to opening and or closing playbook. That $1 membership link is in the chat a few times as well. It really is just $1. We call it a VIP membership because it doesn't go away. Once you pay the $1, you just permanently have access to those resources, and they continue to get updated and improved, i.e., Nathan spent part of his weekend this weekend improving one of those spread calculators, and we're working on a couple of other things in there as well. And of course, we're posting other videos and things like that along the way. It is on one-click trading. So if you do the $1 membership, but you already have access to one-click trading, then you're just going to the same place. It'll show up as if it's one of the premium programs. It'll just be a tile on there, or you can use the search and just search for, it's currently called Opening Playbook because it was originally designed around Opening Playbook before we had a Closing Playbook, but it's really for both groups of people, Opening and Closing Playbook attendees and members. So just go into one-click trading after you've purchased the $1 membership. Go into one-click trading and look for the tile that says Opening Playbook, and then you'll have access to all of those resources: calculators, videos, replays, Telegram channels, all kinds of stuff. Are older replays available anywhere? Yes. So if you want kind of older, more legacy replays, Then you could go to the previous YouTube channel that we were streaming to. I can post that for you. Today's just the day of links, I think. It's going to be youtube.com/@financial-wars. This is going to be, I'm going to put for older recordings, although there are some in the members area. If you do the dollar membership, you can find some of them there. And then the newer recordings are going to be on, whoops, did I mistype YouTube? I did. I think I did a typo in there. Hold on a second. Put an I in YouTube for some reason. Give me 1 second to fix that. Okay, so that looks right. Then newer recordings are going to be at youtube.com/@newmoneycrew. However, when you go to the YouTube ones, they're only going to be the kind of educational or live trading part. They're not going to be the deep dive into the program of the day, so to speak. So like this morning, we did the deep dive into Graham's dollar options, his perfect income, couldn't think of the name of it for a second, perfect income trade alerts program. So those deep dives into the programs won't be part of the YouTube. They will be part of the one that I posted in the Markets PG page. So we're trying to figure out the best way to make these accessible, but also kind of help you figure out where to go for the right thing. So YouTube's also a little harder to search and find things, which is why we made a dedicated New Money Crew channel. So New Money Crew channel will pretty much just have the opening and closing playbooks, and then eventually we're going to be adding an evening program to it as well. But so it'll just have those programs that are New Money Crew programs, and it'll just be Nathan, Graham, and Lance will be contributing to it as well. And then we're no longer posting to that Financial Wars YouTube channel. So again, things are kind of in the middle of changes, and for whatever confusion that creates, we apologize, but we're trying to work toward making it actually easier going forward. So if you go to that YouTube, that New Money Crew YouTube channel, that will be the last couple of days worth of sessions in there. It will only be the beginning part of the sessions. If you want the full sessions, you'll have to look either in the members area for that dollar opening playbook membership, or you can get the last opening and closing playbook on that NMC replays link that I posted a minute or two ago. All right, let's see. I think that answers everything. Yeah, it's also a little harder sometimes. So we try and put the dates inside the names of the videos, but on YouTube does make it a little tougher. So YouTube is designed where basically YouTube kind of decides for you based on its algorithms, like what it's going to feed you as suggestions. It makes it a little harder to create like a channel that keeps everything really organized. That's why we have the members area. That's why we created this page just this week for the last replay of each morning and afternoon session. So we're trying to make it a little bit easier and a little bit more accessible for you. All right. Thank you, Dr. G. All right. If you are a member already of any of Nathan or Graham's programs, including the $1 membership, you can go into the members area and you can sign up for that Sunday 7 p.m. session that Nathan was talking about throughout this closing playbook. You have to be a member of something, of one of their programs, to gain access to that sign up form for Sunday. But if you don't have any of the programs yet, you're just here kind of as a spectator, you can get in for $1. It's kind of a loophole. You can get in for $1, get that dollar membership to the opening playbook resources in the members area. And one of those resources is now the sign up for Sunday's session, which is going to be 7 p.m. Eastern time. How do you know if you have to pay the dollar fee? It doesn't matter what you have. if you want the resources that are in the opening playbook members area, you have to pay the dollar. If all you want is access to Sunday and you don't want access to the dollar membership area, then you should be getting a notice because you're a member already of something else of Nathan's. You should be getting a notice with the sign up form. If it doesn't go out today, it'll go out tomorrow. It might be put in all of Nathan's members areas. I'm not sure if they're going to go through everyone and do it, or if they're just going to send out something on Telegram or by email or whatever to all of Nate's members. So again, if you have the $1 membership, you should be able to find the sign up for Sunday in there. If you have other memberships, but not that one, you should receive a notice sometime in the next 24 hours with the sign up for Sunday night. Pam, how do you get help with your trading? In any of the members areas, there's a help section. There's a tab for help. And in there, it directs you to several different ways you can get support. You can get email support. You can call and get support by phone. That is limited to Monday through Saturday, 9 a.m. to 5 p.m. Eastern time. And the third way to get support is to attend those customer service live sessions, which are live Zoom rooms where they're doing demonstrations and answering questions. And that is Monday through Friday. I don't believe they're doing that on Saturday. That's Monday through Friday, 10 a.m. to 1 p.m. Eastern time. So email 24/7, call Monday through Saturday, 9 to 5, or go onto the CS Live Zoom session Monday through Friday, 10 to 1. Those are your three ways to get support. There wasn't an exit or a target posted on the ANET trade. Just the entry. There wasn't a target posted. So I don't know what they're shooting for on that. They'll probably put out some kind of message about that in the near future. All right. Let's see. I think that covers everything. John G says he thinks that they left the target for you guys to decide on your own. He's shooting for 100% ROI. So I think that might be the case. Let me see if there are any messages that I might have here. All right, let's see. I think that covers everything. All right, we're going to call it a day. Market's been closed for a little while, and we will be back tomorrow morning at 10 a.m. for opening playbook. Thank you all for being here, sticking around. Love having you all here, and we'll see you in the morning. Have a great night.